Housing market Q1 data, both nationally and locally here on the Wichita, Kansas level. I'm going to go over a bunch of nerdy stats, graphs, information, and help you interpret it, make sense of it all and what it means. And I think it's going to be very revealing of what's really going on in the housing market, not the headlines and everything else and your friends and popular opinion, from a very active selling agent in here selling, over 103 houses last year and on pace for doing that again this year on everything. So anyway, before I get into all that, please like, comment, subscribe, share, all that fun stuff. Really helps the channel, helps get the word out, and helps a locally small owned business here for people that I also employ and hire out and contract locally. So what goes around comes around. So please do me a favor and help me out with growing the channel, spreading this information around to help the local economy and everything move forward. With all that, there's a lot to go over, so I'm going to get right at it and go over as overview and quicken as fast as I can. So give me 1 second while I share the screen and I get to the reports. So we have 2 reports to go over: the national trends from Keeping Current Matters for April 2023, which really what that is January, February, March of Q1, and then what people are seeing as an observation, and then obviously how that affects you, how it affects trends, and what people are doing from a mass behavior level. Whether you're looking to buy, whether you're looking to sell, that kind of thing helps you make sense of this world of real estate and what's going on. And then same thing from a local level, what's going on here locally in Wichita and how we compare. And you'll kind of see how the national and local trends paint a picture of how this affects you personally in the Wichita local housing market, depending on what your goals are. So anyway, let's get right into this. Demand is very much based on interest rate environment. And you can see when it gets up to 7, 7.5, buyer demand is pretty weak. 6.5 to 7, it's limited. When it gets down into the 6s and 6.5s, it's good. And under 6, it's strong. And comparatively, that's still a pretty strong interest rate, pretty good mortgage rate to be buying a house on everything, all things considered. I know we were spoiled by those 2 and 3% interest rates, were just absolutely absurd and unheard of. We're also in the middle of a global pandemic, so there's that to take into account too. But don't think that that's coming back again. But really, it comes down to turbulence in the financial markets, putting significant downward pressure on rates, which should benefit borrowers in the short term. But then also you're asking, like, what's that do with home prices? Because as you're seeing, home prices are falling, they could fall, blah, blah, and you're getting all this fear and anxiety and doubt being forecasted to get you triggered in these headlines for advertising. But let me show you what the actual data says, because a lot of times neuroscientists are going over this where it's like, we're telling ourselves what to say or how to interpret things. In other words, we spend 90% of our lives telling ourselves what is happening on everything. So we kind of got to look at what's going on instead of trying to have everyone else tell us what's going on. And this will really paint you a pretty clear picture of home price appreciation, where certain markets are still appreciating and moving up, like Atlanta, Boston, Charlotte, Dallas, is all moving upwards. Miami is moving up. But then you have other markets like San Diego, San Francisco, Seattle that are tanking. Tampa's going up. So it's a very market by market, spot specific location. So you got to be able to scale like in and out for what you're looking at, instead of having these broad, generalized, vast, sweeping statements that people make. Declines in the West are due to tech industry slowdown, severe lack of affordability after decades of undersupply. You all talk to anybody that lives out there, and it's insane how much they pay for rent and housing prices and that kind of thing. And obviously, when their money making ability goes away, so does their house paying ability that goes with that. And this really gives you a very clear depiction of how like the South Atlantic is still appreciating at a rate of 9%. New England's about 7%, East South Central. You get kind of an idea of where things are at. You look at like where we fall, probably about West South Central is where we'd fall in. We're about 5.9%. See the mountains at 1.4 and Pacific is 0 on everything, because they've seen such spotty stabilization and then decreases in certain areas. Same thing with home price movement. If you want to see this graph, I'd be happy to send it to you on everything. The biggest question people are asking is, are home prices stabilizing? Are they falling? They're down 2.6%, depending on what source you're looking at. Moody's says they're down 2% from their peak last July. So yes, they've decreased by 2%. That's nothing compared to like the 40% that they increased over the previous 2 years before that. So we had some of the most record-breaking real estate markets ever in history, followed by a 2% decrease. So yes, it did decrease, but it's not like it just massively dropped and the sky is falling apart. We're stabilizing is what that looks like. Freddie Mac saying it's down 2.5%. 2.5, 2.6%, depending on what source you're tapping into in the data they're looking at. So the biggest question that comes up is affordability. And honestly, it depends on where you're at, and affordability at historic levels is been in a really good place. Other than right after 2008, homes are super affordable because everybody's losing their shirt. And if you were able to buy a house at that time, you were able to get a house at a really good deal, a really good price comparatively to what people were making. And when people look at affordability, you got to look at two things. How much money do I make compared to how much does a house cost? Because here's the thing is, if you make more money, but then you're expecting your house payment to be the same, then that is more affordable. So it's in proportion to how much money you make on everything. And that's how they measure the housing affordability indexed. This is probably one of the most revealing graphs for people to really take into account how quickly things have changed from a monthly payment standpoint. Consistently, I talk to people who say, I want my monthly payment to be around $1,000 or $120 or $1,200 a month. But we're looking at a $300,000 house or a $250,000 house, and they're thinking they can get that house for $1,000 a month. That type of house is closer to $1,800 a month now. And that just changed from 2021 to 2023. So that's less than 2 years. That attitude of what you got to pay monthly for a house needs to change, but people's mindset hasn't changed with this. And this is a national level thing. This isn't just a Wichita local thing. Where you see is a lot of people got very used to paying $1,000 to $1,200 a month, but that was so 2021. And then 2022 rolled around, people started to pay more, get used to a higher monthly payment. October rolled around and they're thinking like, on a national level, okay, maybe we're paying a little bit too much and we're starting to see that decline. Maybe we need to get back to a more reasonable rate of what we pay per month on everything. But in all reality, if you want to buy a $200,000 to $250,000 house starting out, which is where Wichita's at, which I'll show you in a second on the next report, is that Wichita's like a $234,000 average price point market anymore. We're going to have to make an adjustment to paying more for a house. And also you need to make more money, which I know that's a hard conversation for a lot of people to have, especially when we're in a recession and things are decreasing. But there's always opportunity everywhere to go make more money, increase your skills, increase your value to your company, make more money so you can afford to buy the house that you're wanting so you can get ahead long term. You can whine and complain about the environment, or you can find a way to get around it and win. And it's easier for you to hear that statement from me over video than it is in person and get mad at me and pissed off. But that's the truth of the situation. Of where it's at. And you want to figure out how to win, how to beat this market, how to overcome the circumstance. I'm here to help you do that. If you just want to moan and whine and complain about the situation and life and everything else in general, I'm probably not your agent and you're probably not my client. That's enough of that soapbox. But that graph is a very revealing one right there about where monthly mortgage payments are at as a standard for Americans on everything. Also, this one's really cool to look at. Basically, I'm going to sum this one up real fast. Move to Kansas, move to Wichita, the Midwest, based on how much money you make compared to how much money you need to get to buy a house. We have one of the best proportions of what you need to make compared to how much discretionary income you have. Basically, the West is too overpriced compared to what people make. And that's why a lot of them are seeing home prices falling. They're losing their shirt. They're not financially solvent. Whereas if you live in the Midwest, where we're pretty conservative, you can make really good money here. The cost of living is not so high, and that's proven in these graphs here on everything. So the Midwest is definitely where it's at if you want to get financially ahead on everything based on income, jobs, opportunities compared to housing, cost of everything, travel times, everything else like that. The Midwest is the best. And I might be biased a little bit because I live here, but data don't lie. Mortgage payment to income ratio, you can kind of see where typically the best place to be at is about 25%, even though lenders will let you go to 45, 55%, you really shouldn't on everything. People got super gun shy, super scared of paying mortgage payments, and they got all the way down to 11% mortgage payment to income ratio on everything because of how much volatility there was there. Now we're starting to return to more of a normal level of about 24, 25% of your mortgage payment to income ratio is about where you should be at for what you pay a month for rent, or I'm sorry, for your mortgage payment, not rent. Get away from rent. But you kind of get what I'm saying there as far as like in proportion to how these things work. However, this rate drop wasn't enough to make home buying affordable again for many Americans. And what I'm seeing as a major trend is people moving from these other bigger markets, selling their house, and then having either a good amount of cash to buy a house in Wichita or local markets around the Midwest, or to dump, like either do all cash or to have a large amount of cash to come with their conventional loan with that. So that's where you're seeing a lot of the competition is from relos or investors or other people coming into markets like ours where they're more stable and they're getting tired of the volatility of the East and West Coast, and they're coming to stable markets that are in the Midwest. If you're an agent, the thing that can get in the way of your success this spring, and honestly, if you're a buyer or a seller, the thing that could get in the way of your success is mindset. If you're listening to all these headlines about the US dollar crashing and home prices falling and all this other fear mongering that's going on, that's really not true. You could really get desperate and anxious and like down on your dumps. But the truth is there's always opportunity, there's always value, there's always a way that you can win and get ahead and provide service of value in order to get what you want in life. And that has to do with what you choose to look for and choose to see without getting too woo-woo and all this stuff. That's the only thing that can hold you back. Whether you're an agent or you're looking to buy and sell, that's the only thing that can get in the way of your success is mindset on everything. I think that's about all we got from a national level. There might be some trends over here to look at. You really want this whole beast to look at, you really can, but I'm not going to get too nerdy into the national levels of everything. As you can see, Midwest is still strong. Northeast, West is not as strong on everything. Yeah, so that's enough of those national trends. If you want to see more of that, let me know. I'd be happy to send this report. And then also local trends. What we're seeing here on the local trends side of things, I'm just going to go straight to the graphs because those are the best way to explain these things on everything. Closed listings by month. We had one of the worst January and February's in terms of number of sales that we've had in a while. And there's two things that we want to look at here, because you're going to hear misleading stats or overgeneralizations that don't really give you a good picture of everything. When people say home sales are down, what they mean is number of home sales are down. That doesn't mean home prices are down. That just means there aren't as many houses that have been sold. As you can see here, we're in January and February, we sold 525 and 573 as an entire market in our MLS, compared to the 782, 768, 717, 658. We have sold a lot less houses over this winter. And we always know the winter's going to get slow, but it's been one of our slowest winters in a while. Now it's starting to pick back up at 805, and then we'll see what April holds with everything starting to come back to market, the weather picking up, and kind of the natural normal selling season of when weather gets good again. But this is interesting to see in 2022, and this happens every year where it's kind of like spring market. Sellers start to come, buyers are ready to buy. You know, May, June roll around. A lot of the summer activities are going on, things are rolling, and then July you kind of get this weird little urge. We call it the dog days of summer. It's really hot out. People are going on vacations. They're kind of getting tired, kind of burnt out. School's getting ready to start. They got a lot of other things on their mind, and you can see that reflected in home sales in July. Then August, it picks back up where it's like, all right, let's get a house before school starts, before we start to get into fall and the worst selling season of the winter, and it starts to trail off into the holidays of October, November, December, everything. And then that's also why January and February are so terrible, is because you see everything start to downtick like this. Feds are really raising the interest rates here too, and really jacking a lot of things up, is why people start to really hesitate. But the more you study the cyclical seasonal demand of our market, it can make sense, you know, from not just a national level, but to a local Wichita level. But then also, if you really want to get down to it, I could get down to your neighborhood level and your personal house level, which that's something I have to do very specific on your house. I can't provide you a report like this on everything. So when people ask me, how's the market? I'm like, what do you mean? From a national level, from a local level, from a neighborhood level to your house level? Which level do you want me to assess it at? Because there's a lot of data and nerdy stuff to go over here. But that's really what you're looking for in an agent, somebody who knows how to read the market, interpret the market, beat the market, make the best of the market. And that's what you're getting from me when you work with me, is somebody who really knows what they're doing, is not just a pretty face opening the door and just knows everybody under the sun. I really know the market, really know the industry, and you'll get that expert guidance and advice of how to best navigate all this stuff for this big life transition you have of everything. Because regardless of the market is what we navigate, but usually people buy and sell houses based on life reasons. Ultimately, at the end of the day, that's really what this is about. And I'll help you navigate this crazy financial real estate market to have success with what you're trying to pull off overall as it fits with your total life goal. So anyway, that gives you an idea of what closed listings are looking like, what they have looked like, what they're going to look like for the rest of the year. I don't entirely know, other than I know people will continue to be buying and selling real estate for the rest of time, no matter what the market, the interest rate, everything else is. It's just a matter of what that's going to look like. Let's see. So this is what I was saying earlier about how Wichita is now a $234,000 average price point market. And you can see in 2022 where it kind of rose a little bit above there, but I would say that's about where we're at on everything. And you can see how quickly that changed from, 2018, 2019, we're probably like a 160, 180 market on average. Now we're at a 234 market. So, and that's been a tough adjustment. Kind of like I was saying before on the monthly payment being $1,000 to $1,200 a month, you're looking at more like $1,500 to $1,800 a month now for Wichita as a new norm, a new standard of what people are willing and can pay to get a good solid house in Wichita, whether you're starting out or moving up or whatever you're trying to do there on everything. So that's an adjustment that many people are having to come to terms with, because it's not something they can fight really. Because when you look at these market stats and this data and averages, you realize it's very, very difficult to beat these standards, these averages, and the overall large force of this many things working against you. It's very tough to beat that, as opposed to working with it and accepting it and rolling with it and making the best of it. So anyway, that gives you an idea of where our average close price is at. This one has got to be the most deceptive, misleading stat that gets pushed out there. Average days on market compared to median days on market. Median days on market for March was 6. Average days on market was 28. Which one do you go off of? I typically go off the average days on market to give people a realistic point of view of how long it could take to sell your house. Not every house sells in 1 to 2 days or within a week. On average, it's 28 days. But if you go look at the median, it says 6 days. So which one do you go off of? The average, because the average is more realistic for what's really going on. If you have somebody that likes to misinterpret data, deceive you, trick you, put things into perspective for you that make them look really good or the situation look really good, but aren't really accurate and true data, you kind of have to question their ethics, their trustworthiness of really looking out what's best for you, or are they looking out best for themselves on everything. So if I were you looking at selling a house, you would be looking more at this data of the average days on market than the median days on market. You have to be very careful when you talk to realtors of how they misinterpret data and statistics and make things look a lot better than they are, instead of just giving you the real hard facts, even if that's maybe not entirely what you wish it was. At least they're giving you the truth on everything, instead of having data misrepresented, misinterpreted, and sent to you that's false. So anyway, there's that for average days on market. Houses are still selling. They're just returning to a more normal time frame to sell on everything from a local, overall market perspective. Again, each neighborhood, each house is specific, very much depends on the house. The pretty cute, nice, good square footage ones sell pretty fast. The ones that are a little rougher, a little harder, have some weird oddities to them, take a little more to sell and are a little harder on everything. Active listings, I can see, have been going down, but we're starting to see an uptick back to 2020 levels approximately, and we could see them get back into 2019, 2018. But that's still very much a seller's market. Because if you're at 2 to 3 months of inventory, which is kind of what 2018, 2017 was, it's still a seller's market. To get to a balanced market, it's 6 months of inventory that needs to go on sale. In order for it to be a buyer's market, it needs to get up to 7 and 8 months of everything where things flip flop. So, this might look like, oh, we're getting more listings, we're going to go back to a buyer's market or a balanced market. That's not necessarily the case. It's still very imbalanced for everything. And if you're a realtor and you're understand how marketing and sales work, you realize how much that's a good thing for you as a realtor when you know how to play the system and play the situation so that you can get people to act and decide and to do things, instead of thinking they have 20 options to choose from, where really they have 3. And getting people to make a decision is one of the hardest things we have to do. So this is the other interesting thing to look at, is like January and February, we only had 500 some sales, but yet we had the same amount of listings out there for January, February, March. So it's like, yeah, there's listings out there, but they're kind of crappy. They kind of suck. People aren't really buying them. And that's kind of what we were seeing, is that, yeah, there's listings, but people didn't want to buy them on everything. Whereas in March, we got back up to 700 or 800. No, we got the 800 sales, but we still only have 1,059 listings. So that's where it's like when the brand new listings came out, they were boom, gone, like ready to go. And it's because people are sitting waiting for that right perfect house to come through. Let's see, what else do we got to go on here? Active listings. People had really high priced active listings. What else? Average days on market for active listings was 61. So again, what a lot of this doesn't take into account is, you know, listings that go on the market and don't sell and just get taken off of everything. And that's why this active days on market is much higher, because if the house doesn't sell, a lot of times people just stay and keep it. And so it's not like they have to sell or they're forced to drop their price. They just stay where they're at on everything. So that's probably one of the biggest misconceptions people have. That's like, well, it's been sitting on the market forever. Can we go offer them less? You might, but they could just say, no, we'll stay here. We just don't want that offer. Like, we'll just stay here. We'll just stay where we're at. So yeah, month supply, like I said, we're at 1.2. This has to get up to 6 in order to be a buyer's market or a balanced market, and above 7 is where it becomes a seller's market. We're still just so historically low. That's where you see like 2017, 18, we're up in the 2 to 3 month range. That's still very much a seller's market, and that just shows you just how depleted we are when it comes to inventory of sales. Part of this is due to, you know, wholesalers doing deals off market, people doing FSBO or off market deals. And so when that happens, there's less listings that even make it to the MLS. And so there's a lot more alternative methods that people are seeking out and choosing, but that kind of screws up the whole system for everyone when they make those individualistic decisions that benefit them, but kind of screw the whole system with all that. That's a whole nother conversation for another time. History of new listings, you can kind of see where they rise and fall based on winter, then spring, summer, then fall. And yeah, I think that's really about it. People always want to list higher than what they're looking to do there. Contracts written. Trying to make sure there isn't any last thing I need to go over before close this thing out. Really what it comes down to is there's less number of sales. So you can see in 2021 and 2022 how many freaking sales we made. It was amazing how many houses were getting sold then, and it's because of interest rates and environment and everything else. We're returning back to what we call like a pretty normal market at this time. And man, you can see how much it dropped off in 2021 of the winter season, how much things just changed so much weather-wise, seasonally on everything. So I could see a lot more of that happening in 2023. It'll be interesting to see how the entire market goes. But as you can see, like, price just keeps going up. Even though number of sales go down, the price keeps coming up. And that's it. I think I have beat this horse dead enough and give you a good example of what's going on nationally and how that affects you, give you a good example of locally what's going on and how it affects you from a market level. Again, if you want to get down to the nitty-gritty data side of your neighborhood, your specific situation, that's really where I'm here for you, to be a trusted resource and guide from the data, the facts, the options, you know, while also helping you process the emotions and how much you really want to do this or not on everything, and helping you not just make data decisions, but also emotional decisions around these big life changes of buying a house, selling a house, and everything that goes with that. So thank you for watching. If you have, please check out some of the other videos I have. Please like, comment, subscribe, share this with anybody you think it might benefit from, and we will see you guys later on the next one. See ya.